This is the chart on Power Ledger on the monthly time frame. Price did pop up to roughly 27 cents before selling off. So the pop up was due to the news from last night that Ripple won their lawsuit against the SEC. However, Ripple is down roughly 16%. Bitcoin is down roughly $400. And so Power Ledger was also down roughly 10 cents. But the real question is whether this is the start of a bull run or was it a bear trap. Let's look at this article and then I'm going to give you my thoughts. This article is coming from beingcrypto.com. Power Ledger price spikes 25% in 3 days. Is this a bull trap? So the POW PR is the native token of Power Ledger, a technology company that builds software for decentralized sustainable energy markets. The POW token grabbed investors' attention after briefly hitting a high of 23 cents yesterday. The intense activity among the Power Ledger whales investors appears to be a critical driver behind the ongoing price rally. Like in any asset, the smart money or the whales in terms of crypto, they're the ones that really move the market. As seen below, between June 10th and June 14th, Power Ledger went from 0 to 17 large transactions. Large transactions gauge the level of whale trading activity by aggregating the daily number of transactions that exceed $100,000. But it's just not the whales. Furthermore, on-chain data reveals that retail investors too have begun to ape into the ongoing power rally. According to Sentiment, the number of daily active addresses on the Power Ledger network has risen significantly this week. The chart below illustrates that prior to the price spike, Power Ledger only attracted 43 active addresses on July 9th, but by the close of July 13th, the figure had spiked by 800%. So if we go back to the charts, we can see that we had whales participate and we also had retail investors that participated. So let's analyze this. You do have a double bottom, right? So that signifies a potential price reversal. And again, this is the monthly chart, so that's really huge. Question is, did the whales influence price higher only to sell to the retail investors? Nevertheless, what I can see is you have potentially the formation of a W pattern. And if you get a break above, say, 30 cents, a break above and a close above 30 cents, which is near the apex of the W pattern, only at that time prices will go higher. Let's go down to the weekly chart, and you can see this W pattern a bit more apparent. However, look at all these wicks. All these wicks. That's just all selling pressure. Unlike when price started out in 2022, all these wicks on the downside of the candles meant buying pressure. These wicks right now represent selling pressure. All right, let's go to the daily chart. Now, what's interesting about the daily chart is you have price attempting to stay above the moving averages. And the last time that happened, it was a false breakout. However, this is part of the double bottom pattern. So what could have happened was price spiked. However, all the unfilled buy orders weren't filled. Price comes back down to fill those unfilled orders. And so this might be the potential of a real reversal pattern. So what are my thoughts? Start of a bull run or a bear trap. Short term, this was a bear trap. Longer term, this potentially is a start of a bull run. Bull run begins a close on the monthly chart above the 30-cent level. Bear traps will remain as long as price on the monthly chart remains below 30 cents. Thanks for watching. Subscribe. Please like the video.